In the world of trading, knowing how to set stop-loss and take profit levels is crucial for effective risk management. These tools not only protect your investment, but also help in securing profits when the market moves in your favor. Understanding how to strategically place these orders gives traders greater control over their trades and minimizes emotional decision-making during market fluctuations. The first step in setting a stop-loss is to determine the level of risk you are willing to accept on a trade. This involves analyzing your entry point and establishing a clear amount, either in percentage or dollar terms, that you are prepared to lose before exiting the position. For instance, if a trader enters a position at $100 and decides on a 5% stop loss, the automatic sell order should be placed at $95. This way, losses are contained within your risk tolerance, allowing you to trade with confidence. Next, it's essential to establish your take profit level, which acts as a target for securing gains. This level should be based on your trading strategy, whether it be a scalping tactic, day trading, or longer-term investment. A common approach is to set a take profit at a multiple of the distance risked with the stop loss. If your stop loss is set at $5 below your entry, consider setting your take profit at $10 above, thus allowing for a 2.1 risk to reward ratio. This method helps ensure that even if a winning trade does not happen frequently, the profits outweigh the losses over time. Monitoring market conditions is vital after you have set your stop loss and take profit orders. Stay informed about economic news and trends, as these factors can dramatically shift market behavior. Be prepared to adjust your orders to reflect significant changes. Keeping a flexible mindset will enable you to adapt to new information, enhancing your overall trading strategy and outcomes. Lastly, it is important to remain emotionally detached from your trades. Relying solely on your stop loss and take profit levels allows for disciplined trading. This discipline prevents panic selling during downturns and foregoing profits out of greed. Utilize these tools to automatically execute your trading plan, ensuring you stick to your predetermined strategy without second-guessing your decisions.